Americans for Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida Fair Tax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, January 30th, 2026. The VAT blueprint, how it works, and how fraudsters drain the system. One of the options to replace the $4.8 trillion presently being collected by the federal income payroll tax system is the value-added tax, or VAT. Today, over 170 countries rely on a VAT as their primary revenue engine. Now, like the fair tax, the VAT is a consumption tax, but unlike the estimated 3 million entities that would collect and pay the fair tax, approximately 8 million U.S. entities would be responsible for collecting and paying the VAT. Now, this is how it works. Unlike the fair tax, which is collected once at the final retail purchase of new retail goods and services, the VAT is collected in fractions at every stage of a product's journey, including the final retail purchase. Now, most nations use the credit invoice method. Every time a business buys a component, like wood for a chair, they pay the VAT to their supplier. When they sell the finished chair to a retailer, they collect VAT. And when the retailer sells the chair, they collect the VAT from the retail purchaser. Now, each business in the chain of production then performs a calculation. They look at their output tax, and that's the VAT they collected from their wholesale or retail customer. The input tax is the VAT they already paid to their suppliers, and they only pay the government the difference. Now, this creates a paper trail where one company's tax deduction is another company's tax liability. In theory, this makes the system self-policing because businesses need valid invoices to claim their credits. The system's biggest vulnerability, though, is the VAT refund. If a company pays more VAT on its inputs than it collects on its outputs, common for exporters or startups making large equipment purchases, the government writes them a check to refund them the difference. Now, fraudsters exploit this by creating fake paper businesses that issue fake VAT receipts that show VAT was paid by a company when it was not, and allowing that company to get a check from the National Treasury. China uses the golden tax system, which requires every invoice to be issued through government-monitored hardware. Now, despite this, labor dispatch fraud remains common, where shell companies issue invoices for consulting services that never happen to help real firms lower their tax bills or actually receive payments from the government. Brazil's complex system has led to the rise of notarios, shell companies registered using straw men, often the identities of the poor and deceased. These firms issue millions of fake invoices over a few months and then vanish before the state can audit them. India faced a massive surge in fake invoices. Fraudsters harvest the identity of daily wage laborers to register benami or proxy firms. Indian authorities recently detected billions of dollars in tax evasion linked to these digital ghost networks. Now, within regions like the European Union, goods move tax-free between member states. This has birthed carousel fraud. In this scheme, a company buys goods tax-free from another country. They sell them domestically, charging the VAT to the buyer. The trader disappears without paying that VAT to the government. The buyer, who may be part of the scam, then exports the goods and claims a refund from the government for the tax that was never actually paid. And then there's the zapper. In the retail and hospitality sectors, fraud is digital. Electronic sales suppression, or ESS tools, or zappers as they're often called, are software programs or USB drives that selectively delete cash sales from a restaurant's point-of-sale system. By zapping, say, 20% of the day's sales, the owner keeps both the hidden income and the VAT that was collected from the customer. In conclusion, the VAT is used around the world and is favored by many in our Congress because it's included in the price of goods and is not often disclosed on the receipts issued to the retail purchaser. According to data analyzed by the Committee for a Responsible Federal Budget using CBO estimates for the 2026 through 2035 period, a 5% broad-based VAT would raise approximately $3.5 trillion over 10 years, or an average of $350 billion per year. Now, extrapolating, we see that a U.S. VAT rate of over 70% will be needed to replace the nearly $5 trillion now being raised annually by the income payroll tax system. The IRS commissioner has admitted that our federal income payroll tax system suffers from over $1 trillion of evasion each year, and while the VAT evasion numbers vary from country to country, the evasion amount is estimated to be around $500 million around the world, and their rates are generally between 15 and 25%. If the VAT tax in the U.S. is 70%, then the U.S. evasion will almost certainly greatly exceed evasion under the fair tax with a 23% rate. A U.S. value-added tax will be evaded more than the fair tax because of the fact that over 90% of the fair tax will come from less than 10% of the retailers, and because of the way the VAT works, more opportunities will be available for a company to evade the value-added tax. While all alternatives to the income payroll tax system need to be carefully examined, it's clear that the best alternative is the fair tax, a national retail sales tax on new retail goods and retail services. It provides a family credit so that purchases up to the poverty level for every family are not taxed. There's no withholding from your paycheck, and you never have to file a tax return again telling the government how much you earned and how much you spent, and you'll never be harassed by the IRS ever again because the fair tax abolishes the IRS. Now, many of you have labored tirelessly for freedom from the federal income tax and the IRS. You deserve a great deal of credit for your efforts to educate the American people on the need to fund the American government in a way that's good for America and that returns freedom to the American people. It's imperative, though, that we don't replace the current income tax in the IRS with an alternative system that can still be manipulated by the ruling elite. We must let Congress and the President know that the best way to replace the income tax in the IRS is with the fair tax. Now, make no mistake about it. The fair tax is a grave threat to the ruling elites. It will strip them of their power and their ability to control us through the tax system. Their opposition to the fair tax will be fierce and unrelenting, and don't think for an instant they won't use half-truths, deception, and downright lies in their desperate attempt to hang on to their power. However, with the support of this president, we can finally eliminate the income tax and the IRS. Now, of course, the best course of action is not only to repeal the income tax and abolish the IRS, but to repeal the 16th Amendment as well so that no future administration can ever shackle the American people with an income tax again. We must come together and ensure that real tax reform, the fair tax, is not subverted by the elites in D.C. This will take the diligent efforts from all of us. We need your financial assistance, and we need your grassroots assistance. Now, if you have contacts that will allow us to get more information about the fair tax to President Trump, please let us know. Also, please email us at info@fairtax.org, and we'll give you some options on how you can best help us. At a minimum, please call your congressional representative and ask if he or she supports the fair tax. If so, thank him or her for their support and suggest they become a co-sponsor of H.R. 25 if they're not one already. If not, ask why not. Now, if your representative claims to be unfamiliar with the fair tax, offer to have someone come to their office and explain it to them. The solution: pass the fair tax. Now, why would D.C. pass the fair tax and give up an almost unlimited source of donations? Well, they won't, at least not voluntarily. The only way they will is if the rest of us demand it. Isn't it time to end this ludicrous tax collection system in the IRS along with it? Help bring about real tax reform and stop future IRS abuses. By contributing, or actually investing, $10.40 a month, you help provide a financial base to Americans for fair taxation. Now, if you can make larger contributions/investments, these will be used not for salaries, as we're all volunteers, but for the needed updates to our economic studies, which will be vital for all future years. Please go to fairtax.org to invest in AFFT and help us pass the fair tax. It's an investment in your and your family's future.
This has been the Weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation. Check back every week for news and information about the fair tax and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at fairtax.org.